Good morning, ladies and gentlemen, and welcome to the Cornerstone FS PLC interim results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged. They can be submitted at any time via the Q&A tab that's just situated on the right-hand corner of your screen. Please just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so, and these will be available via your Investor Meet company dashboard. Before we begin, I would like to submit the following poll, and I would now like to hand you over to CEO James Hickman. Good morning, sir.
Good morning, and thank you, Jake. Good morning, everyone. During this presentation, we're going to have a look back at H1, see some of the progress we made, sort of a deep dive into the numbers. Myself and Judy are presenting today. Please, as Jake said, please do feel free to ask any questions at all, and we will certainly answer what we can do. So without further ado, delighted to be able to announce maiden pre-tax profit. And this was versus a loss of 3 million last year. Revenue increase 90% to 3.6 million. EBITDA positive 200,000. Cash and cash equivalents, very important, 816. And that's obviously an increase from December 2022. Interestingly enough, from a non-financial perspective, we've increased our capability as part of our strategic plan in the number of currencies that we can pay in and out of, now up to 150 countries in 58 currencies. This is very much a strategic direction that we're going on, and as previously mentioned, we're not doing this alone. This is innovation through partnership. So it's increasing our number of counterparties and partners to be able to offer our customers and potential customers even more choice in terms of currencies. Another highlight for H1 was Consumer Duty. We were ultimately Consumer Duty compliant in the specified time given by the FCA. It was no small feat at all, and the team worked extremely hard to get us there, but a very, very important milestone, not only from a regulatory point of view, but also from a customer point of view as well. And final sort of piece here, we are ahead of market expectations, and Judy will come on to that very shortly when we delve into the detail. So in terms of our stated strategy, and sort of spoken on this before, very much investing in people. We've strengthened our compliance and regulatory side of things. We have strengthened our sales side, and we continue to do so. So this is a theme that will continue throughout H2, and also going into 2024 as well. We're actively building our sales capability and continuing to do so. And obviously, you can see through the numbers and revenue growth, that is really starting to pay off. We continue to develop and enhance products and services, as I mentioned, our counterparty capability, but also in terms of product set. We look forward in H2 to be able to announce some other exciting developments. We're expanding our customer base in terms of the types of customers that we're onboarding, and this is very much done in a regulatory compliant manner. Thus, the investment in compliance and in our sales as well. One item to note, and again within the strategic stated strategic goal, is to reduce the number of the traditional white label businesses that Cornerstone has served, and increase our direct revenue. And pretty much in that journey, we are nearly done. We have a couple of white label that we service, but ultimately the majority of our revenue, or over 90% of our revenue, is now direct. And in terms of the regulatory side of things, as I say, we will continue to invest, continue to grow out our expertise, because ultimately, particularly in a payment services business, as I said before, the compliance and the regulatory aspect are really an incredible value to us. In terms of our platform, sort of the journey that we've been on, a lot of the development has gone into, or certainly H1 this year has gone into the onboarding process. So in terms of creating effectively a straight-through process, we've completed that. We've invested heavily into new systems, ultimately creating a platform or addition to our sort of in-house platform that enables us to onboard customers seamlessly without any friction at all. So a benefit to us and also a benefit to the customer. Other than that, as I say, we are actively looking at a card program, and we should be, within the next few weeks, be able to announce the completion or certainly the decisioning on that. And I'm looking forward to updating the market on that and when it happens. So without further ado, we'll dive into the numbers now, and I'll hand over to Judy to go through the next part of the presentation.
Thanks, James, and welcome everyone. I really am delighted to talk you through our first half of 2023, and I hope over the next few slides you get a true sense that this is a really transitional period and a set of results for us, and the culmination of a lot of hard work from everyone across Cornerstone. So starting with revenue, as you've already heard, revenue for the first half of 2023, 3.6 million. That's up 23% from the previous half of 2.9 million, and 90% up from H1 of 2022, when we achieved 1.9 million. Key drivers of this has been the expansion of the sales team, as James has already mentioned, particularly in the second half of 2022, and that indeed was supported by the small tuck-in acquisition of Pangea FX. We've continued to build out our introducer network, including in our A desk, which has really continued to go from strength to strength. And we've also seen the embryonic revenue development from the expansion of our counterparty base, so increasing our reach into currencies, sectors and countries that are harder to serve. That stands us in good stead as we look to grow further in future periods. Collectively, those factors have helped us grow our number of customers. So 874 customers traded with us in the 12 months ended 30th of June 2023. That's up from 697 customers from the previous period. And as you can see on the graph on the top right, I really think this demonstrates that we consistently delivered very, very impressive sequential revenue growth over the last 5 halves. Moving on to gross profit, we achieved a gross profit of 2.2 million in H1. That's up over 88% year over year, when we achieved 1.2 million, and up 24% sequentially. The margin is broadly consistent with the 2 previous halves at 61%. And James already touched on this, but you can see on the graph on the bottom right that the proportion of revenue derived from our direct sources has continued to increase, up to 91% in this half, and the share of white label business therefore 9%, down from 26% in H1 22. That's a result of really the decision to manage down almost all of the white label stable, only maintaining a handful of partners that meet certain profitability thresholds. The gross margin benefit of that, you would expect a natural gross margin benefit of that, given the payaways to white labels are typically around 70 to 75%. The gross margin benefit of that has been partially offset by a change in commission arrangements, particularly with Robert O'Brien, the General Manager of APAC and Middle East. Previously, it was agreed that would be set at enhanced levels in 2023 compared to 2022. You may recall that in March, we announced that Mr. O'Brien had agreed to vary certain elements of his commission arrangements, decreasing his share on certain established revenue lines and increasing his share on the profitability of the Dubai office. That was immediately beneficial for us within the half, and we saw a small uptick in the gross margin in the second quarter of 2023 compared to the first quarter. Turning to adjusted costs, which are costs less depreciation, amortization, share-based compensation and transaction costs. Adjusted costs for the first half were £2,600,000. That's down £81,000 from the previous half, and so delighted to show that we've achieved our first half of sequential cost decrease, and the first half of adjusted costs being lower than gross margin. So it really reflects the strong cost control ethos that you've heard from us over previous presentations, with rationalisations, particularly in the areas of legal and professional fees and marketing and PR, that we've reinvested into growing the sales team and making the enhancements in our platform, particularly around the onboarding journey, as James already mentioned. That in turn led to us delivering our first period of EBITDA profitability, 190,000 for the first half of 2023, compared to 319,000 EBITDA loss recorded in the previous half. Below adjusted EBITDA, we've also achieved further key profitability milestones. We achieved operating profit of 138,000 compared to 2,647,000 loss in the second half of 2022. There are a number of things to explain in this transition, so please bear with me as I explain through those. The most significant transition is in our share-based compensation charge, which reduced to 173,000 in H1 23 compared to 2 million H2 2022. That variance is entirely attributable to the share-based incentivisation agreement that the group had with Robert O'Brien and the Asia team that followed the acqui-hire of that team in H2 2021. As you may recall, that incentivisation agreement was settled in H2 2022, meaning we have no further share-based compensation charges related to that agreement. Secondly, we generated a profit on disposal of the subsidiary of Avila House in the half. You may recall that the sale was announced in December but completed in April, receiving £300,000 in gross proceeds. We held the small e-money balance held by Avila House was on our balance sheet at a value of 93,000, meaning we recognised a profit on disposal of £207,000 in the period. The third notable change is the recognition of interest income related to the group's safeguarded balance. You may be aware that under the terms of our EMI licence, we're required to protect customer funds in designated safeguarding accounts with authorised credit institutions, and the interest rate environment has meant that interest has become much more material and significant, and we are not, under the terms of our licence, able to pass that interest back to our customers. So the group has recognised in the half 184,000 of other operating income related to the interest on those customer balances, that compared to 31,000 in the prior half. Below operating profit, finance costs were 115,000, consistent with H2 2022. That includes 65k of interest related to the £2 million of loan notes that are on our balance sheet, 2.2 million, which I'll get to shortly. They have a fixed coupon rate of 6% per annum. The income tax credit of 12k in the period related to deferred tax asset release, and in the period in the prior period we recognised R&D tax credits, which we typically receive in the second half of the year. Whilst we are now in a profit generating position, the group currently has accumulated tax losses of around about £5 million, and therefore we don't expect to recognise a tax charge in the medium term. And as a result of all of those changes that I've outlined, and there were quite a few, so apologies, we generated our first net profit also in the period of 35k compared to the 2.6 million loss in the prior half. Turning away from the income statement onto cash flow, And we see some other firsts for the group. So we generated an operating cash inflow of 114,000, and we generated our first overall cash inflow for the period. Importantly, no fundraising flows impacting that, of course. 134,000 overall cash generation, and you can see from the waterfall graph on the right how that breaks out. So the 114,000 cash inflow from operations, comprising the 184 interest on client safeguarded funds, as I've already mentioned, 186 in other cash-based operating income, and a 255,000 working cash outflow. The 300,000 sales proceeds from the Avila disposal were largely consumed by the capitalised software additions as we continue to build out our proprietary platform, and 66,000 interest charge on the loan notes. Therefore, the overall cash outflow, as I mentioned, 134,000 for the period. That would have been a cash outflow of 166,000 were it not for the sales proceeds from Avila House. And very briefly, looking at the balance sheet, cash stood at 816,000 as at 30th of June 2023. Total loan notes were 2,173,000, comprising 2 million due to Rob O'Brien under the terms of his settlement agreed in August of last year. That's repayable in July 2026, and 173,000 in deferred consideration related to the Pangea FX acquisition. That's repayable on the 31st of August 2024. Loan notes in the period reduced by 225,000 following the conversion of a loan note held by Mark Horrocks following receipt from the FCA of approval to take his shareholding above 10%. Net debt therefore reduced by 360,000 in the period to 1,356,000. Within equity, the deferred consideration reserve stood at 1 million as at 30th of June 2023, and related to deferred consideration on the capital currencies acquisition. That was originally recognised as being equity settled. However, you will recall that in March 2023, we negotiated an option for the company to settle that in cash, and that is certainly within the management's forecast to utilise that cash settlement method. The final deferred consideration tranche is repayable in March 2025. Just in summary then, on the financials, I wanted to ensure you really took away that this was a transitional half year for us, and we really are delighted with our progress. And as you can see from the following metrics, they all turned positive in this half. So adjusted EBITDA went from a 319k loss in H2 2022 to 190k EBITDA profit in H1. Operating profit, net profit, we generated an overall cash flow, though as an overall cash inflow of 134k, though as I mentioned, that was supported by the 300,000 gross proceeds from the sale of Avila House. We remain on track to deliver recurred cash generation in the second half of 2023, in line with our previous commitments to the market. And all of that means we had an extremely positive impetus going into the second half, which I'm pleased to say has been sustained in the first 2 months of the half of H2. And we therefore expect full year 2023 results to be significantly ahead of market expectations. And further, given the great progress we've made on our overall strategy, the current prospects of the group, a clear focus on our strategic growth, the board is confident that the group's funding position is comfortable and sufficient to support our existing growth plans, i.e. we do not expect to make any further fundraisers or dilutive events. And with that, I'll turn back to James.
Thank you, Judy. So just to wrap up in summary before we go to questions, and we've got a fair few of them, so we'll try and race through those as quickly as we can. So just in summary, we're a growing business with cash, what we believe is the right strategy, and executing that strategy. We have definitely the right people. We've got a great team here, very experienced, very ambitious people, and that definitely cannot be underestimated. And importantly, we're able to attract from within the industry some very senior people that just shows how far Cornerstone has come along, and certainly within the industry now very well respected. We've got a in-house platform that is extremely robust, well built, scalable, absolutely fit for purpose in terms of payments and running an EMI, e-money license. We have the regulation. We have the team behind the regulation, so compliance, and we are now focused, as I said before, very much on direct revenue. So long are the days giving away most of the revenue in terms of revenue share. Ultimately, for us, you know, we're working hard to acquire the customers, and therefore we're reaping the rewards of that. So in summary, a fantastic growing business in a great segment in payments. So much is happening in the payments world at the moment, and we're ideally positioned to capitalize on that. So without further ado, I think we'll go on to the questions now, which we have quite a few. So I'll read them out, and some that I will take and some that Judy will take. So the first one, this year a dozen of countries' currencies depreciated massively, Zimbabwe, Venezuela. One of Cornerstone's benefits is to manage currency risk for clients. How's currency risk management going at Cornerstone? Any significant gain through spread betting? So I guess two answers to this. The first one, we definitely don't take any risk at all on behalf of customers, or in fact on our own book as well. So spread betting is completely out. There is none of that. Secondly, this gives us a chance to add value to our customers by guiding them through you know, a lot of the currency pairings and the fluctuations. So very much, absolutely, we add value to our customers. But I will absolutely say that we do not take any principal risk as a business at all. We're only adding value to our customers, and we're certainly not advising them in any way. The next one, can you provide an update on the following taken from the 2022 full year results RNS? A core element of the group strategy is to establish a global payments network that would enable Cornerstone customers to be able to pay from and pay out to any jurisdiction via any payment method. Whilst it's still relatively early days, important steps have been taken implementing this strategy. Well, I'm delighted to say that we've increased our number of counterparties, and we continue to do so. In fact, we're onboarding with 2 more as we speak, very large ones actually, so we'll increase our capability even further. I've touched on the card proposition, so that's another payment rail that we will be adding. So in terms of the strategy of adding to our sort of global footprint, if you like, in terms of the payment rails, absolutely I'm delighted with progress on that. It's not going to stop, it's going to continue. And ultimately our ambition is to cover as much of the globe as we possibly can do in terms of payment capability. Next question, please can you provide an update on the following sorry, let's read that one. An update on the 2022 year results RNS to be able to support customers with more of their business needs. The group has formed strategic partnership with specialized and alternative lenders to offer a range of funding solutions. Yes, absolutely. Now on our site, it's worth noting actually we're updating our site currently, so we will be launching a glossy new site very shortly, which actually is much more aligned to the products and services that we now offer and the type of business we are. But in terms of those partnerships, we are both reciprocally receiving and also sending clients both ways. Now, I think I said initially when we launched this, we don't perceive this as a silver bullet in revenue terms. This is very much around for customers to make ultimately sure that they're served well, and we have trusted partners for some of their requirements that perhaps sit outside of what Cornerstone's core capability is. So that I'm very happy with. And again, we'll continue to progress on that, and not just around lending, but other bits of businesses, and certainly to expand our proposition.
Okay, I'll take the next one, and it's a very long question, so I'll try and summarise it. Is the company still expecting to maintain 6.5 million full-year revenues, which looks on the low side? So as I've already mentioned, 6.5 million is the analyst consensus that's out there, that was published in April of this year, and we are now expecting our full-year revenue to be significantly ahead of that. As you know, Shore Capital we're taking on as a broker earlier in this half, and we do expect them to publish an initiation note on us probably in the coming month or so. The group's performance in H1 2023 is exceptional. It underscores the potential for growth under the current corporate strategy, which seeks to optimise the potential of CFS's technology platform. Blah, 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 blah. Sorry, there's a lot here. I think essentially the genesis of the question is the current value of the company seems to be disconnected with the first half performance that we've delivered, and we would probably although we're not allowed to give our own guidance on valuation, of course, we would certainly agree that when you compare us to some of our peers in the industry, we do look particularly undervalued. And as we've said in previous presentations, I think when you look at the sum of the parts, including all of those points really that James has just summarised in his last slide, again, we would probably look undervalued, particularly, as I said, in reference to our peers. Do you want to take the next one?
Sort of the next question actually seems to be a little bit of a follow-on. Appointment of Shore Capital as the company's broker. The appointment of such a high-profile broker seems a real coup for Cornerstone, considering the relatively small market capitalisation value of the business. Can you provide some background as to how and why Shore Capital was attracted to Cornerstone at this time? Ultimately, Shore Capital see the value in the business. They can see what we're trying to do. They can see the direction of travel of the business. Very much, we were selling to them rather than them selling to us. Absolutely right. Shore Capital is a very high-profile broker, and to looking in, you might say we're punching above our weight, and at this time we probably are, to be honest with you. The reality is this business has big ambitions, and in order to fulfill those ambitions, aside from revenue growing the business, we do need the support of a brokerage like Shore Capital. So we're absolutely delighted that they're coming on the journey with us, and have made an impact straight away, actually, must be said. So we're absolutely delighted to have them supporting us. Next question. Do you want to take the next one, Judy?
With these type of companies, bonuses are obviously paid to management and staff. Will there be cash bonuses, or will it be paid in shares? If it's cash, can you tell us more about the structure, please? So I'll actually have to refer you to our ad doc for the answer to this question. So the structure of our compensation is outlined in that. Both James and I receive a 40% cash bonus of our salary. That's typically paid after the annual results are published, and really, as you would expect, the KPIs around bonus payment are set by our remuneration committee.
Next one. Hi, James. Did you take up your options at 10p? I think they were due to expire a while ago. I certainly hope they weren't due to expire a while ago.
They're 5 years.
They're
Yep.
five years. I've been actually with the business a year pretty much to the day. So this is yeah, there's some way off, but I certainly, you know, in terms of incentivization, my part of my incentivization, to be frank, is to ensure that the share price performs well for existing shareholders and to create shareholder value. So I'm very much aligned in terms of shareholder and company goals from that point of view.
There may be a confusion because there was a tranche that vested over the first year, but they expire after 5 years.
Can you please give more information on large share-based incentive given to Far East in the past and what has changed this year?
Yeah, so I will take that. So as I mentioned, we actually, it was an acquisition of the team out of one of our white label partners, actually, in H2 2021. As part of that, they were incentivized based on the incremental profitability that they would generate being part of the Cornerstone group. Due to the huge overperformance of that team under the Cornerstone brand, they hugely outperformed our expectations, and therefore the share-based compensation charge related to that incentivization agreement was fairly substantial. I think over 4.4 million over the year and a half after the acqui-hire. That was settled, as I mentioned, in H2 of last year, in terms of a £2 million loan note to Mr. O'Brien and the issue of shares to him and his team of around about 18% of the company. So there is nothing more to do in terms of recognising any future share-based compensation charges related to any acquisitions or acqui-hire agreements.
Do you still expect gross margins to increase further over the coming years up to 66%? What I would say is I would expect margins to be maintained given our value proposition. Having said that, given that we have a very or relatively high transaction value, you know, there is a cap on margin that we can create. Ultimately, if we were doing a lot of very small trades, then yes, you know, there is room there. But ultimately, because we are attracting high net worth individuals, business customers that are regular customers, and ultimately transferring relatively larger, you know, transactional size, larger sums, then really, you know, to increase it much further is going to be a push. So in this mix of business, having said that, as a broader mix with other products, then yes, quite possibly.
I think just to supplement that, what we're saying is there will not be the shift change that you might have seen over previous periods. We've seen a stabilization now, and there will be probably incremental ones and twos up to a kind of a natural ceiling of this type of business. I think.
Yeah. Agreed. Absolutely right. What part of the business are you most excited about? What worries you most, and what's your biggest worry? So, what part of the business excites me most? Ultimately, it's the opportunity. It's the people, and we are doing business in a very, very exciting space. Payments is really exciting at the moment, and overall financial services, particularly within the payment sector. As I said before, there's so much change, there's so much opportunity going on, and it is genuinely a super exciting time to be involved in it. What worries me most, and I think it's what worries any CEO or anyone involved in a financial services business, is you know, there's fraud risk, obviously, and also compliance and regulatory. I know we spend, you know, an awful lot of time and money and effort, but always, you know, keeping up with regulation is always a challenge, and it's not going away. It's always going to increase, and making sure that we're always ahead of the regulatory environment, or at least keeping pace with it, as I say, is a challenge. So worry is probably not the right word, but certainly, it's something I think about a lot.
James, Judy, if I may just jump back in there, and thank you very much for your presentation and for addressing all of those questions that came in from investors this morning. And if I may just remind investors on today's call that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. But James, perhaps before really just looking to redirect those on the call to provide you with their feedback, which I know is particularly important to yourself and the company, if I could please just ask you for a few closing comments to wrap up with, that would be great.
Yeah, absolutely. Firstly, thank you very much indeed for taking the time to listen to us. It is very, very important. As a business, you can see we've undergone significant change over the past 12 months and continue to do so, and will continue to do so. As a business, we are, in my opinion, just at the start of our journey here. We have, and as Shore Capital said, we're at the very beginning with huge potential. We're growing fast. We have the cash reserves to do so. We have the right people, most importantly. So very, very exciting times for Cornerstone as a business. And I encourage you to continue to follow us, continue to support us, and please do feel free to reach out to either myself or Judy if anyone has any further questions, and we will certainly try and answer if we can do under my rules. Thank you.
Thank you.
James, Judy, that's great. And thank you once again for updating investors this morning. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This won't take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Cornerstone FS PLC, we would like to thank you for attending today's presentation. That now concludes today's session, so good afternoon to you all.